Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Thursday afternoon, and that means we all have the treat of speaking with the three amigos. How you doing, Matt?
Doing awesome. Super excited to be doing this and not what I've been doing the rest of the day. But thanks I'm happy to be here.
Yeah, we can just tell the audience that it's been negative 25.
Wind chill, yeah.
Yeah, and pipes and water don't like that. So I'll just apologize for all of us right now.
That's fine.
Yeah. Sorry. Deal with it.
This is why only winners win, right? This is why only winners win.
This too shall pass. And Dion, how are you?
Howdy, guys. Doing great. Ready for round one. I like Thursday. It's my favorite day of the week. And I don't want to rub it in Matt's face or anything, but it is. I'm tracking 35 days without a tenant issue.
Woohoo!
35 days. I broke a month. So literally a text.
We just need to send Michael Scott on site. He'll be fine.
Don't know that reference, but that's okay. That's all right. So, yeah, I don't think I've gone 3.5 days without a tenant issue.
But that's what happens to be when you're the kindergarten investor and you only have 16 units. A lot smaller opportunity.
Yeah, I was gonna say, I remember that was 12 years ago.
Exactly. Yeah, exactly. Well, hey guys, one of the things that I was interviewed about yesterday or the day before is first-time home buyers. It was an interesting discussion, something we don't talk a lot about. But basically the question I got, and I want to ask both of you, and I think we should just acknowledge, is the question I got was really this. Michael, you've been doing this, you've been buying rentals for 21 years. Your competition you talk about is owner occupants, because that we're kind of a lot of, at least first time owner occs were fishing in the same pond. The question was, is this the hardest real estate market you have seen for first time home buyers? So Dion, I'll go to you first.
So I think it's the hardest, but not just for first-time homebuyers, for investors too. I remember in 2018 having to cherry pick between probably 10 deals that made sense and figuring out which one was the best one, offer on 5 or 6 at a time, and then hope to get one accepted. It's not that way now. Now it takes a lot more hunting and digging to find the deal. As an investor. So as a first-time home buyer, it would be difficult too. So I think the problem first-time home buyers and investors are running into is in 2013, had I invested, it would look like this. In 2017, had I invested, it would look like this. And right now, it's not going to look that good. What is the great deal for now that you can get? Because getting on the property ladder is going to have a bigger impact than getting that perfect return that you were looking for in a market that we're just not in now. Inventory as low as it is probably the biggest challenge I think we have because increased competition for less things to compare to. If somebody learns how to invest in this market, they're a rock star.
Yeah,
I agree with that. There could be some other black swan event that we don't see coming, but the odds of that are, in my opinion, under 5%, where we have 95% chance that 2 years from now, it is going to be easier to invest.
Yeah, I would agree with that. 2 years from now should be a lot easier. But Matt, when you think about the first time homeowners or new investors, definitely in the residential space, is this the hardest market you've seen?
I think it's the worst I've seen ever for single family homes.
Right.
I think it's one of the best I've ever seen for small multifamily, 2, 3, 4.
Okay. I like that.
I think it's one of the best. And I think the reason that it's one of the best is that, you know, you're in there and you're competing on a single family home. And you're fighting against a bunch of other people that want a single family home.
Yep.
And it's very rarely in a lot of these markets, there's some investors for sure on single family home, but we all know that owner occs, that's why you lost 250 2 years ago, right? Is because you were losing them to owner occs, owner occupants. And so this time around, I think where we are in this market is that if you can reframe your mind as to what real estate success is, those 2, 3s, and 4s, they can get a 3.5% loan down on a $600,000 duplex, and they can live in one side and it cost them $1,000 a month out of pocket. When if they were living in a condo built exactly the same way with a shared wall, they'd be paying $3,000 or $3,500 a month. So I think if you can look at the math, I think that it is probably the best time in history to be a non-single family home purchasing owner occupant in small multifamily 2, 3, 4.
I think that's a great way to put it. I'm glad we went there. So when I was thinking about this yesterday, it was definitely single families because that's what most owner occupants look at.
Sure.
And when I went back and broke it down after, right, we talk about record low inventory, 920,000 homes, which is unheard of.
Right.
But I went back and I peeled the onion by price levels because again, 920,000 homes includes all the $1 million homes, right?
Sure.
It includes everything, right? So when you try to put in the threshold for first-time home buyers across the country, we're sitting at days of inventory.
Right.
It's never been this low. And then to Dion's point, when you add on top of that, there's people like me preaching one rental at a time, and all the investors are competing. And then, oh, by the way, you've got Wall Street who strokes a check, and you know, you have all of this. It's very, very competitive. So I've got more there, but I want to go back to what you said, Matt, and really what Dion is doing. I think a lot of frustrated homeowners or wannabe homeowners, first-time home buyers, take these guys' opinions and go give it a look. Instead of looking for your forever home or your first-time single family, why don't you at least kick the can on some duplexes through quads and then sacrifice a little bit like both these gentlemen did, like Anna Kelly did, like so many others on my channel have. You're right. I think the owner occupant buyer of a dupe through quad has an advantage over investor because you can get in for 3.5, where I got to come in with 25 or 30%.
That's right. That's right. That's right.
That's a great little twist.
And so I think that, you know, as I look at it and I say, you know, the new construction builds around us are about, so one neighborhood just came in. They're selling at, I think it's 559. And I want to say that house is about 15 to 1600 square feet. I just bought a 3,400 square foot duplex for 525.
Yeah.
And one side was already rented out. One side was vacant. The side that was already rented out was $2,000. The side that was vacant, within 3 days, I had it rented for 3,100. So, and my mortgage, all in, taxes, insurance, the whole 9 yards, is 2,907. So they could be moving into either side. You know, they could be $1,000 out of pocket and let those people stay, or sorry, gotta go. Then they're moving to that unit. They're renting out for 3,100. They're net even, not a dime out of pocket. And so that previous mortgage that they would have been paying $3,000 or $3,500 a month for, because the taxes are higher on that building, their payment would have been $3,500 on that building. Instead of paying $3,500, they're making $200, and they now have an asset that will do nothing appreciate. So that $3,500, hey, where do I save? How do I get my next down payment? 1 year of $3,500 a month times 12 is $42,000. Sounds to me like that's well on your way to your next down payment for your next $500,000 duplex. Just saying.
Yeah.
That's pretty much how that worked for me. The house hacking added to the savings rate, plus the savings that you already have, put those together. Took 2 years. I wasn't making a lot of money. There is an asset class that can help in a situation like this that a lot of people skip over. This asset class doesn't have home buyers pursuing it like small multifamily. So you take out your biggest competition pool. And even a lot of investors forget to look for this asset class because searching for it is nuanced.
Right.
A house with an ADU.
Most
people tell their agents, look for small multifamily in this footprint with this price range. And then they have their criteria that they screen out. Home buyers go, I want single family houses in this footprint with my price range. But hardly anybody, because home buyers don't want tenants and investors aren't adding. You have to have the terminology in your search. ADU, DADU, granny flat, mother-in-law house, whatever colloquialism is used in your area, you have no control over what the listing agent is going to put it under. But if you search for anything, you can figure out what they're called in your area. The real benefit to that is lending. Even though it's multifamily, small multifamily, that is a single family house with an ADU. So conventional can be 3% down for your first time, 5% down for owner occupied second properties. But you're taking out the investing people that don't want to look at small multifamily because their family can't stand the idea of their garage touching the garage of their tenants. So now you actually have that forever home feel of your property, your buildings don't touch each other. So if you're having trouble getting your family on board with house hacking because they don't want their garages detached. That's another way to solve that problem too. So hopefully people put that into their thought process as new home buyer, and first, adding as an investor, that's an asset we should be looking for too.
Yeah, totally
I
agree.
agree.
The other thing that's going on, just to kind of round this out, as I thought about it, is developers or builders. They are, at least in my market, they are certainly not building first-time home buyer homes. I mean, the price point is 25% above the median, so it just doesn't play. It's definitely the move-up buyer for me. So you're not getting that fresh inventory coming in. Talked about Wall Street. Wall Street has long said that the best risk-adjusted return is a single-family rental. And then lastly, we've got build for rent, right? Which is consuming developers, right? So we are fishing in a pond. There's affordable homes that's getting smaller and smaller, and it's not being replenished with new fish. So it is going to be hard. What I think you guys nailed it. If you're going to be a first-time homeowner, you might need to do something non-traditional. Get something with an ADU, get a duplex through quad, because the magic of getting on the property ladder means you're building equity. It means that next move is so much easier, and you can save, i.e. $42,000 in Matt's example. So yes, it's hard, but maybe you just need to tweak your mindset a little bit and get on the property ladder, because it's amazing once you get there, instead of just being frustrated. What do you guys think of that? I'll go to Dion first.
I think as much as I don't like to do it, I have this big of a disagreement with something that you advise.
Okay, go for it.
One rental at a time focuses on learning your area average and then going for those great deals.
Mm-hmm.
I think the first-time home buyer and the investor in a market where there's this limited inventory, I'm okay with the base hit. Don't buy an alligator.
No.
Don't buy something that's only going to get a 2 or 3% return. But if your area average is 8% and you haven't seen an 8% in a while, that's not the area average. There's so little inventory that the area average is lower. So if you find an 8% in your area,
take it.
And it meets the other criteria of several economic drivers, aspects of the property that'll help limit tenant turnover, but your return might not be as much, then.
Hard to disagree with. I like that. All right. And Matt, what do you think?
I think delayed gratification remains the story of the day, right? Just delay. I mean, forget single family, think duplex or triplex or quad if you really have the stones. But largely speaking, do a duplex. And even in that example that I gave you, every single person I talked to said, "Oof, overpaid for that." And I was like, "Let me show you some math." And I was like, no, it's okay. You can show me all the properties you have that are making 29% return on capital. I'm ready. I'll let me get comfortable.
I'm good. Yeah.
1, 2, 3, go. Okay, none. Right. So, I mean, that's really the thing is I think that people need to look at it, and great business people pivot. They pivot. Great business people pivot.
Yeah.
Steve Jobs didn't show up and go, "Yeah, man, wow. The Mac's not doing pretty well. It's that Next isn't going too well. I'm still going to make that computer, and that's what we're going to stick with."
Yeah.
Like greats pivot, and they're known for their pivot. So great investors, same exact thing. Even if you're new to the game, Mike and I talked about this a couple of weeks ago, is your asset class that you're looking at. Before you think about leaving your market, look at all of the asset classes in your market. And I bet you will find an undervalued asset that probably will get you pretty incredible return. And you don't even have to look for a single family with an ADU. You can look for a single family that has a garage already on it that's separated from the house. And likely you can build on top of that. I'm going through the approval process right now on a duplex that I absolutely stole. And we're actually taking the 2-bay garages and we're going to build a studio apartment on top of each one of them. So it'll cost me like 50 grand. The return on that capital is going to be like 3.5 years, and then I own them flat.
Yeah, that's pretty awesome. The last thing I want to say is if you are an owner occupied buyer and you're dead set on single family, I have a word of caution about the next 6 to 10 weeks. We are in a low inventory environment with rising rates. And that means you are going to have a lot of people who are freaking out and thinking they are going to miss the bottom. So you are going to see a lot of people overpay. You thought last April was bananas. It is bananas squared right now. So if you want to jump in that mess, go ahead. You might be a little bit more free in the summer because again, this rate rise is going to cause some just unnatural behavior. So be careful. Matt, how can people find you?
Lumberjack Landlord, Mr. and Mrs. Lumberjack live stream tonight at 8 p.m. Damn the torpedoes. We are doing this thing even with all these burst pipes. We will figure it out.
And that's a great way to start. We had one here and one here and one here.
Mhm.
And Dion, how are you? Or where can people find you?
Right here on YouTube, Dion Talk Financial Freedom. My live streams are Tuesday afternoons, 4 p.m.
How long did the last one go?
3 hours and 29 minutes.
Yep.
Almost 3.5.
You
Yeah.
two are amazing. I
He's
will
awesome.
not be doing a 3 hour and 29 minutes.
You come really close though. If you look at your 7 o'clock update or 7:30 update, 8 o'clock YouTube, 9 o'clock private group. I mean, your Saturday mornings are pretty close to what we do.
Yeah.
Getting a couple hours.
Okay, I feel better.
Yeah.
All right. Thank you very much.
Thanks, Mike.
Yeah.
Uh-huh.